Folks, gather round. Forget the memes, forget the noise, forget the Fed's latest word salad about transitory inflation that somehow became permanent. Let's talk real money. Let's talk silver. Because something is stirring in the belly of the beast. Something fundamental, something powerful, and frankly, something the financial establishment desperately hopes you'll ignore. For years, decades even, silver has been the forgotten cousin. Gold gets the headlines, thanks to the central bank vaults and the James Bond mystique. Silver, it was just industrial metal, the workhorse, the poor man's gold. Well, folks, that narrative is about to shatter like a cheap champagne flute. And the trigger? A simple number, $40. Why such a fuss at $40? Because it's not just a number. It's a psychological Rubicon, a line drawn in the sand by decades of failed breakouts and manipulated disappointment. Think of it as the castle walls holding back a rising tide of monetary insanity. And guess what? The tide is rising fast. You see, beneath the surface, the pressure has been building. While everyone obsesses over stocks hitting meaningless nominal highs fueled by printed dollars, silver has been quietly consolidating, building a base stronger than the excuses coming out of Washington. But now it's coiled. It's ready. And when it decisively breaches that $40 barrier, all bets are off. Here's what happens when silver punches through $40. The fund managers finally wake up. Suddenly, the blinking screens in those Manhattan towers start flashing silver breakout. Portfolio managers who have ignored this sector for years, chasing overvalued tech stocks or yield-starved bonds, will be forced to take notice. It's not about ideology anymore. It's about performance. They see a chart screaming momentum, and they see an asset class with tiny institutional ownership relative to its potential. They see beta, the potential for outsized moves. They have to allocate capital, and passive funds tracking indices will have to buy. The inflows start, not a trickle, but a wave. And their buying begets more buying. Next, we have industrial panic. Think beyond the funds. Silver isn't just a shiny rock anymore. It's the lifeblood of the future. Solar panels, silver. Electric vehicles, silver. 5G, electronics, medicine, silver, silver, silver. Companies using thousands of ounces per month see $40. And then they see $45, $50 flashing on the horizon. Their CFOs break out in a cold sweat. Budgets blow up, and suddenly hedging isn't a boring cost center. It's survival. They scramble to lock in future prices. They hit the COMEX and they hit the physical dealers. This isn't speculative demand. This is essential demand. It adds rocket fuel to the fundamental fire. And as all this is percolating, social media ignites. Remember the frenzy around certain other assets? The power of the crowd? Well, $40 is the signal flare. Suddenly, millions of eyes glued to Reddit, Twitter, and TikTok realize, hey, silver is moving and it's still relatively cheap. They see the tiny physical market compared to the massive paper shorts floating around on exchanges, and they see the potential for a genuine physical delivery squeeze if demand explodes. The hashtags start trending, the memes get shared, and the pressure on the short sellers intensifies exponentially. Those Wall Street bets type, well, they start to discover a new, far more fundamentally sound dragon to slay. $40 is the starting gun for that race. Now, what's driving this pressure cooker? Look no further than the yellow metal leading the charge, gold. And let's be brutally honest. Donald Trump, for all the chaos, might just be the best thing that's happened to gold prices in decades. Why? It's simple. Uncertainty. Trump represents a potential seismic shift, a potential return to aggressive tariffs, a potential undermining of the Fed's independence, a potential acceleration of debt-fueled spending regardless of who's in charge. And of course, geopolitical volatility. The market hates uncertainty more than it hates high prices. And gold thrives on it. It's the ultimate fear gauge, the ultimate currency without a central bank. Every tweet, every poll showing a tightening race, every hint of political upheaval sends another wave of capital fleeing towards gold. It's not political cheerleading, it's cold, hard market reality. Fear drives gold. And silver isn't just tagging along behind gold. Historically, once gold establishes a strong uptrend, silver doesn't just follow. It launches with incredible torque. We call it the gold-silver ratio. Right now, it takes roughly 80 ounces of silver to buy 1 ounce of gold. Historically, that ratio averages closer to 50 to 60. During major bull markets, it collapses towards 30, even 20. That means silver has massive pent-up catch-up potential. Why? Two reasons. Firstly, we have the volatility factor. Silver is a smaller, less liquid market than gold. Think of it like a speedboat versus an aircraft carrier. When big money finally flows in, it moves the silver boat much faster and harder. Small changes in demand create disproportionately large price swings. It's inherent leverage. Secondly, we have the dual mandate. Remember that industrial demand? When the economy is strong, industry sucks up silver. When fear is high and money printing runs rampant, investors pile into silver. Silver often gets the best of both worlds. Industrial demand on the upswing, monetary demand on the fear trade. Gold primarily just gets the fear trade. This dual nature amplifies silver's moves during a broad-based commodity currency crisis. Am I saying silver is going to $100 tomorrow? No. That's the kind of hype we avoid. Markets need to breathe. There will be pullbacks, shakeouts, and moments where it feels like the breakout was a fake out. And of course, the paper shorts will fight tooth and nail to stop this. The establishment media will trot out their usual bubble nonsense, usually right after they missed the entire move. But here's the undeniable truth. The fundamental case for precious metals has never been stronger. Decades of irresponsible fiscal policy, mountains of unpayable debt, a central bank that views the printing press as its only tool, and a world becoming increasingly fragmented and unstable. Gold is screaming this reality. $40 is the tripwire. It's the signal that the dam is breaking. It's the moment the sleeping giants, i.e. the funds, the industries, the masses, finally wake up to the opportunity hiding in plain sight. It transforms silver from a niche play to a mainstream must-have. So watch that $40 level. Watch gold continue its ascent, fueled by the uncertainty that seems to be our only certainty these days. And get ready, because when silver finally decisively conquers that wall, the real fun, the real volatility, the real wealth-building potential in the precious metal space is just beginning. And don't say you weren't warned when the speedboat leaves the aircraft carrier in its wake. Peter Schiff, Adrian Day, Andy Schechtman, Jim Rogers, I can go on. But hey, I've been saying it for years. The fiat money experiment is crumbling. Real money is reasserting itself and gold is leading the charge. That's why we all love silver. Silver is coiled, undervalued, and ready to explode. So remember, $40 is the spark. Keep your eyes peeled. The metals don't care about elections, they care about value. And right now, silver represents extraordinary value. Let the breakout begin. All right, everybody, thanks for watching. If there's stories you want us to cover, please let me know in the comment section. Also, if you enjoyed this comment and you think silver is about to rocket, maybe share this video. Just an idea. All right, everybody, thanks for watching.